Hi everybody, Steve Santa here, Santa Energy. Just wanted to get with you real quick and just talk about the oil prices we've been seeing over the past few weeks. I know a lot of people are watching the news, they're wondering, so I thought we'd take a minute, kind of explain what's going on behind the scenes here and how the pricing gets to you. So here we're looking at a live pricing screen. This is coming to us from the New York Mercantile Exchange. It's showing contract options and pricing for New York Harbor ultra low sulfur diesel, which is what we base our heating oil on. There's also crude oil and gasoline. And so this pricing, every time there's a trade that's made on these, it updates with the current pricing. So you can see here there's the months going down the side. And this is what helps us to offer fixed contracts and pre-buys out into the future, because we can buy a contract in each one of these months out into the future, and that fixes our price. There's a supplier on the other side that wants to know what they're going to be able to sell into the market in the future, and so they back up, paper to paper to make these trades. And so we have a guaranteed price in the future, and they have a guaranteed sale price. So that's how we offer contracts out into the future, so people know what their price is going to be. But April, the current month or the front month, is the closest tracking to what the daily market rate is in the fuel today. And so that's what really everyone is watching for, the price of fuel that we can offer today. It's all based on that front month contract. Okay, so here we are in the tank farm. And as you can see, we do hold quite a bit of physical product here to be able to get it out to our customers. Along with holding that physical product comes a lot of risk with the price. And of course, if we bought it and the price dropped out on us, we cannot afford to lose that value that we already purchased. So we have to go out on the market and we buy hedging products through that futures market to make sure that we're price protected every day. And what that does to us is it ties our product here to the price of the market. So when the price increases from what we purchased it at, our hedge would decrease. And those two balance it out to effectively set our product at the market rate. And the opposite happens when the price drops. So the price of fuel would decrease, we would have to sell it for the lower market price, but that hedge would increase in value, offsetting our loss. So that's why we go out on the futures market and we purchase the hedging protection products, and we relieve them as we sell the fuel out of our terminal. We're relieving those paper hedges to make sure that we're protected, and it ties us every day of the week to that market price on the New York Mercantile Exchange. So we're looking at the live chart here of the New York Mercantile Exchange ultra low sulfur diesel. We call it the ULSD contract for New York Harbor, and this is in the month of April. That's the front month, the next month coming up, and so that's the month we can see trading for. If you look back, you can see the history all through February. We had nice even pricing. We were able to kind of give a nice constant price through pretty much all of February. And then of course the disruption in the Middle East starts right here at the 1st of March. And so you can see pricing immediately starts to rise as the market sees that there's disruptions in the amount of oil coming out of the Persian Gulf that's affecting the supply getting to the market. And as news continues to come out, you see these very volatile swings, kind of day to day changing with the news as to how much we think we're going to get oil out of that region, any other things that are going on with attacking oil infrastructure or shipping or other issues. And it's just causing this constant volatility in the market. And as you could see, the wholesale pricing in New York Harbor went from about $2.60 and it's now up in the $4 region at this time. So that just gives you an idea of what pricing's been doing over the last 30 plus days. So we're doing everything we can to give you the fair price every day of the week. We're running our delivery schedule just as we always do. We don't want anyone to run out. If that's a concern for you, please give us a call. But we're going to continue to make our automatic deliveries just like we always do. We don't change our automatic schedule based on pricing. That's absolutely not how the game is played. We are here to try to help you keep your family warm and safe. And obviously this volatile pricing, it's not good for us. We know it's not good for you. We're here to help you. If you have questions, give us a call. We want to be here for you in the future, many more years. Thanks for sticking with Santa Energy.